Hey, good morning. This is Meir Valensky with Driving Markets. A bit sunny outside. Okay, the usual caveats. Anything said in this piece is an opinion only. It's not investment advice, not financial advice, and therefore it's only for media publication. It's not there to do anything else but give an opinion. Okay, so let's get going. So yesterday the markets could not hold on to their gains. They were all up in the morning, all green or all blue, depends on your screen, and then they were sold off in late afternoon, and all of them ended up in negative territory. So let's just go in there one by one. So let's talk first of all about the indices. The Dow, the S&P, the Nasdaq, the DAX, the FTSE were all down on fears, on continuous fears of inflation and also continuous fears of rising interest rates. Remember, in financial markets, uncertainty is the worst possible characteristic to have in any scenario, and that's what you've got at the moment. You've got the central banks that are not committing. They're committing to lowering inflation, but they're not indicating anywhere to financial markets where the end of the cycle will be, and the end of the cycle is nowhere near. Maybe in 18 months that might be towards the end of the cycle, but for the next 18 months interest rates are going to continue rising. We need to wake up and smell the coffee, or more to the point, the central bankers need to wake up and smell the coffee, because inflation is bubbling along there and it's going to get hotter. It's not going to go down. The turbulent geopolitical and the supply chain crisis is going to continue. China's going into new COVID lockdowns. I've been saying this is going to frustrate the supply chain and cause further inflation. I'm not too sure if the central banks are fully aware of that, because they just seem to be sitting on their big fat backsides, drawing in $3-4 million a year salaries, and seem to be completely out of touch with the general market. It's Joe Public that is actually suffering here. It's Joe Public that is paying the 18-20% increase in prices for simple basic living, whether it's food, whether it's clothes, whether it's toiletries, and not even talking about energy prices. Energy prices are going up by 80 to 100%. So again, if the central bankers were to go into the street, I'm not too sure if they would actually understand what's going on, because they're completely out of touch. And as long as that inflation is raging, and it is raging and it is going up, because there's a demand issue in terms of massive demand, and there's a supply issue in terms of limited supply, what you're going to have rising inflation and rising interest rates. So you need to brace yourself for that. So you can expect on the indices, in my opinion, to go down much further. I'm calling the Dow down to 25,000 by year end, and the Nasdaq 10,000. I've repeated this several times, and that you need to be very, very clear on that. Another big sell that I think is Apple. Now, I've got a friend that I mentioned, I'm going to mention his name on Driving Markets, called Ronnie Hanan, and he said something very funny yesterday. He goes, Apple don't produce new phones. All they do is produce new numbers. It's the same phone, but they just call it Apple 9, 10, 11, 12, 13, 14. They just change the number and charge you more. And I find that very, very funny. It was very entertaining. And I promised him I would mention his name on Driving Markets this morning. So there you go. I've kept my word on that one. He has been mentioned. But as far as Apple is concerned, Apple is a big sell. The reason being because they're not innovative. They're not actually coming out with any new products, and therefore Apple's going to float all the way down to $100 a share, and it's going to stay that level or even go lower, because any company that is not innovative is quite simply one-way direction. It's cash cow. It's cashing its existing loyal customer base with new money, and therefore it's going to end up going down. Hard to believe. It sounds like an extreme view, but it's going to go down for sure, 100%. Also, Facebook fighting in a very tight environment of advertising revenue, that also is going to go south, and it's going to go down below $100 a share, because I don't think it's got anything positive on the horizon apart from buying other companies. It's not innovative, it can't design, and therefore it's going to pull in the technology from other companies that are innovative. So Facebook is a sell. There was a tragic story on the weekend of Bed Bath & Beyond, where the chief financial officer committed suicide. The shares crashed yesterday, but that's not the tragedy. The tragedy is that he committed suicide within the company, and it is really horrendous for that to happen. The company obviously is in trouble, but no one knows why, what motivated the actual CFO to go and jump off a building. It's very, very sad, and really sympathy to the family on that particular note. Talking about FX, wow, the dollar is going super strong. The pound is under massive pressure at 114.5. Euro is just sinking down to 0.95. So the dollar has been a solid investment from the beginning of the year. I've stated that over and over again. Look at dollar yen. Dollar yen is at a 24-year high at 142.5. When it was 131, I was saying to you all the time the dollar yen's going to go up to 140, 142. It's broken that, and it's likely to go higher. So it's a 24-year high. The yen is under huge, not in a depression necessarily. It's just the politics and the policies of Japan is to keep a zero rate policy, where the policy of the US is to raise interest rates. So therefore you've got a rising interest rate currency, which is the dollar, against a zero interest rate currency, yen, and therefore the dollar is naturally going to get higher as investors and traders pour into it. Gold is come off. It's not going to hold the 1700 level. It's going to fall below that to around about the 1675, 1670. If it breaks that, then obviously it's going to go down to 1600, but that is the next support level on gold. Cryptos, Bitcoin had a very bad day yesterday, down $940, and it's down again overnight. I've been calling crypto down to the 18,000, and it's 18,600. It's going to approach that. If it breaks below 18,000, the next support level is at 15,000. And many crypto traders or Bitcoin traders are saying it's too extreme. I'm not calling it extreme. I'm saying it as it is. It's going to go down. This is Meir Walensky. Keep on staying short. Driving markets. Subscribe. Pass a comment. Happy to hear from you. Have a good day.